Next panel deals with unlocking the Bitcoin layers, looking at the components and seeing where we can build on the capabilities and leverage future opportunities. Our moderator is Gina Abrams, Chief of Staff for Trust Machines. Ladies and gentlemen, can you please provide a warm Miami welcome to Gina Abrams.
Thanks for being here at this panel. My name is Gina Abrams. I'm Chief of Staff at Trust Machines, where we're really interested in creating new and productive use cases for Bitcoin, as well as leveraging Bitcoin as a settlement layer for Web3. And today, I'm joined by Brittany Laughlin, Executive Director of the Stacks Foundation, as well as Sean Butterfield, Research Analyst at Messari. And I would love to start with some brief intros in terms of your backgrounds, as well as where you're coming into this conversation on Bitcoin layers from.
As everyone knows, my name is Sean Butterfield. I'm a research analyst at Messari. Messari is a institutional grade data analytics market intelligence firm, which also provides research. And for me specifically, I focus on layer 1 protocols and a little bit of DeFi. And I'm on protocol services where we basically provide quarterly reporting and objectively capture all of the activity through publicly available on-chain data and try to contextualize and really bring insights to the readers. So it's a little bit about me.
Great. Good morning. I'm Brittany Laughlin from the Stacks Foundation. If you're not familiar with Stacks, it's a protocol, it's like a top 100 protocol that allows you to add programmability to Bitcoin. So this is like our key innovation. You'll hear more. It is a Bitcoin layer, hence the panel. But I've been in crypto since about 2014, first as an investor in Coinbase back in the day as a seed stage. So just seeing this evolution of, back then we just called it Bitcoin tech. Now it's much broader than that, but I think it's kind of coming full circle with Bitcoin still being the dominant asset, the asset that comes to mind when you think of blockchains and crypto first. So I'm very excited to talk about layers today.
Great, thank you both so much. And so to start, I'd love to hear a little bit about, how you see Bitcoin's economy and future success, and sort of what are the properties that really set it apart from some of these other assets, and especially given the recent market turbulence. I'd love to hear from Brittany and then Sean.
Yeah, well, I think Palm said it like, is Bitcoin the boomer coin? It's like, maybe. It's been around for a while. It's safe. It's trusted. It's the most accessible. It's 2x the next largest by market cap. It's 2x the size of Ethereum. I think people think of programmability and innovation often associated with Ethereum and all of the things going on there. But Bitcoin itself as a store of value presents a huge opportunity just, to unlock that value, to use that value. But right now, it kind of just is stuck. You hold Bitcoin, but you don't really do anything with it. It's not a productive asset beyond just the market fluctuations. So I think this idea of a trusted, brand-aware asset, globally accepted, in recent news, this is exciting again. People are like, I don't want new and shiny and 100x yields if it means it's going to crash and bring down huge systems or it's built on scams. So I think there is a move to Bitcoin coming back into conversation, coming back into focus as a place for more innovation because of its trustworthiness and its security. So I think it's a very exciting time, not just because of recent events, but because of some of the innovations we'll talk about on this panel as well that are coming out now that have been in the works for years to make possible, because it's been very hard to innovate on Bitcoin, but we're now finally seeing some really interesting innovation that's going to totally unlock the programmability on it in the coming years.
Yeah, just kind of piggybacking on what she said, It's been around for over 10 years now, most decentralized asset in the digital asset space, and most secure. So I think a lot of institutional money that's interested in, kind of onboarding that asset into their portfolio are more interested in something safe and secure, and a lot of these other alternative chains or application-based tokens, there's different attack vectors, a lot of compromised wallets or smart contract vulnerabilities, and I think what you guys are trying to accomplish, focusing on Clarity smart contracts, kind of like a safer attempt at programmability. I think there's just a lot of good synergies, trying to settle on Bitcoin, considering it would take a lot of resources to really reverse any transactions on Bitcoin. So, but overall, I think, as everyone has witnessed, there's been a lot of turbulence this year, a whole mess of deleveraging that took place early this year, followed by a lot of, the collapse of CeFi, Terra, and then you got inflation, the cost of energy going up, mining operations that are, getting challenged. So, there's, it's pretty wild how much has happened in the past 9 months or 10 months. But I think there's a lot of opportunity right now, and I think it's worth people spending time and, getting up to speed on what they're potentially interested in, and that's kind of my take.
Absolutely. And so continuing down that vein, what, from both of your opinions, Sean first and then Brittany, I'd love to hear, what really needs to be true 3 to 5 years down the line to maintain Bitcoin's dominance?
So Bitcoin's dominating for quite some time now, but obviously what Brittany was saying, the productivity of Bitcoin is lacking and has been lacking for some time. And Ethereum kind of paved the way with DeFi Summer and NFTs, and a lot of enthusiastic participants navigated in that direction. So I think to maintain any form of dominance, increasing productivity, programmability on Bitcoin will be really critical, I think, in the near term. And with that, you have the entire DeFi ecosystem off of Bitcoin, and it's you're going to have to do a lot of convincing, educating, bringing more awareness to why you should bring all of the DeFi user base who's become acclimated to DeFi on a completely different ecosystem over to Bitcoin. So.
Yeah, I think it's, there's a lot of stuff happening already on Bitcoin. There's things like NFTs, there is DeFi, as mentioned. But I think, this is just the beginning of the Bitcoin economy. I think a lot of people forget that Bitcoin is an economy. There's miners, there's the halvenings that happen. 2040 is the sunset date for new Bitcoin blocks to happen. That means that all of the value for miners to continue to mine transactions comes from transaction value. And if we're seeing Bitcoin price appreciate, that means every transaction gets more and more expensive. So if I just wanted to send someone $100 worth of Bitcoin, it may cost me $1,000 at that point. And I don't think people are going to be very excited about that. So I really think that layers create this opportunity to capture a lot of value in a single Bitcoin transaction and continue to create incentives for more transactions to happen on Bitcoin. Because I think if you ignore the miners and the economics that they're going to need to continue to secure it, you're kind of overlooking a huge part. And so, I think that there's no way that Bitcoin can survive unless the number of transactions goes up, the value of those transactions goes up over time. So, Stacks is one of those layers that is providing that. It has ultimate settlement on Bitcoin. So that means that you can have a lot of transactions that happen on the Stacks chain and then know that it's actually secured in the Bitcoin chain over time. There's other projects like RSK and Liquid that do this. Many of you are probably familiar with Lightning. It's more of just a payments channel, but it also has ultimate finality on Bitcoin. But I think it's just such a green space of adding a lot of value on top. And I think we've seen this in Ethereum, where the value of Ethereum, the amount of stuff that's built on top of Ethereum is about the same size as the market cap. If you combine those two, then they're basically the same market cap as Bitcoin. But if Bitcoin doesn't have that extra functionality or that extra way of capturing value on top, I think you're going to see its dominance kind of, go away. So it is just thinking about, like, if I want this to be a long-term productive asset, how do we grow the whole economy? And I think Bitcoin is not designed to have like thousands of transactions per second, but it is really great for very high value transactions where you could roll up, thousands or millions of dollars worth of value into a single transaction. And so to me, that's like where we have to head in order for the asset to be around.
Great, thank you both. And what do you see as some of the main challenges and hurdles ahead to building Bitcoin layers as well as their adoption?
Yeah, so I think I touched on this a little bit earlier, but Solidity and Rust are the smart contract programming languages in the broader ecosystem. I think there's substantially more developers that are currently programming in that form. So Clarity on Stacks is a relatively new iteration of a programming language that similarly you have to convince the developers to basically move over to a new language. And if anyone speaks more than one language, you could imagine the amount of time it takes to learn a language. So you kind of have to incentivize them, and it's like, where do they see the value? Like, what kind of rewards can they see? And I think as human beings, we kind of have some kind of expectation of value, whether it's monetary or some kind of recognition or praise. And unfortunately, in this space, there is definitely a monetary incentive. So I think onboarding developers who are enthusiastic and are willing to bring productive applications onto the Bitcoin ecosystem will be important. And then just similarly, I think for the longest time, there's definitely a community of Bitcoin holders who are maybe less interested in applications that exist within the Bitcoin ecosystem. So I think everyone could coexist. I think having the flexibility of building applications in that way makes sense. And it's like, if you want to use it, use it. If you don't, you don't. But I think it's important, like what you're alluding to, because transactions over time will just be really costly. And if you can kind of relay that cost to a different layer, that helps package a mess of other transactions in a programmable way, could definitely benefit. So.
Yeah, I think sort of adding on to that, there is this holy grail of how can I use my Bitcoin in other applications without having to wrap it or trust another custodian? And I think that's a challenge at Stacks we've been thinking about for a long time. The project's been around since 2014, and the belief has always been Satoshi's vision of there will be multiple layers that build on top of Bitcoin. That was, in the early sort of forums, you can go back and check. And so this belief of how do you allow folks to hold their Bitcoin on the Bitcoin chain, lock it in a transparent way. You don't have to trust a custodian to do that. And we're very excited that actually we've been working on this for a number of years, and it's actually coming live. The white paper will be live later this month, so we'd love for you guys to check it out and read it. But basically being able to read and write to Bitcoin, which is a huge unlock. Because if you're an institution and you want to be earning, a DeFi yield or participate in lending on your Bitcoin assets that you already hold, you're not necessarily going to trust a custodian. You're, especially after this year, you're not going to trust some big exchange to do this on your behalf. But if you know that you can do it on chain, you can do it through a smart contract, it's audited, it's using Clarity, which is transparent, readable, testable, all of that will just make it a lot easier to open up all of this institutional capital that's holding Bitcoin and make it a productive asset and really help grow this economy. So we're very excited that this innovation is coming. We've been patiently waiting. We have seen things like wrap Bitcoin in order to take that Bitcoin and use it in other places, but this is sort of a true unlock, I think, for our industry to be able to see that and bring that to life. So we're really excited about what that opens up. But it does require entrepreneurs, it does require developers to think about the landscape of what can be built. Maybe it's replicating some things we've seen in the Ethereum ecosystem, or maybe it's a totally different business. Bitcoin is associated with very high value transactions, high security. So maybe it's bringing on-chain more assets that are high value by using these smart contracts, by being able to use Bitcoin as the underlying value, and do things that we haven't been able to do before because there hasn't been a way to do it on Bitcoin. So I think it's kind of just thinking about all of the unlocks that happen and really taking this new technology and allowing it to like grow and be reimagined in different ways that people want to use their Bitcoin and get more value out of what they already hold.
Great, thank you. And yeah, just to double click on that, what would you say is the opportunity ahead for developers, for institutions that are really interested in adopting or seeing progress in Bitcoin layers, especially when you compare it to some of the other layer ones that have been more established? Yeah, if you could just add on to that.
Oh, yeah, well, I think like Bitcoin is the most globally accessible asset. It's the asset when you turn on like, CNBC, it's like in the corner, it's a ticker. It's the most well-regulated worldwide. It's the most accepted. So I think entrepreneurs who are thinking about where there's infrastructure already built, there's a ton of it that already exists. There's a ton of brand awareness. So how do you welcome those people who first come into Bitcoin and give them more to do with it? There are simple things like Bitcoin NFTs or Bitcoin DeFi, but what else could they do with it, and how can that really impact some of these economies that exist globally that benefit from Bitcoin, that use it as a really central part of their economy? I also think that developers who are new to the space and they want to learn Clarity, like at Stacks Foundation, we provide free training and education for learning, developing Clarity. These are global programs. We continue to expand, just making it easy, free, cheap for people to get into this space and start innovating and experimenting with it. So I think you need the talent. There's clearly an opportunity, and then I think just with entrepreneurs seeing that, hey, maybe you take something that already works in another ecosystem and you bring that to Bitcoin. That might be the first people we see, but like I said, kind of those true innovations that maybe don't exist yet, I think is great. So if you know anyone who's interested, again, send them to stacks.org. It's our foundation. We have tons of resources for entrepreneurs. There's an accelerator, there's a pre-accelerator. I see some companies who've been through the accelerator here in this audience, so I think there's just a lot of opportunity to like learn and grow. So we have the resources to help out.
Great. And Sean, I'm also curious from your perspective, how are you evaluating adoption of these layers that are building on Bitcoin, and what are some of the metrics that we should sort of be looking out for?
Yeah, so real quick, I cover DeFi and layer ones at Messari, so you can kind of look at metrics a little differently, so like with layer ones, you're looking at decentralization, nodes, transactions, unique addresses, and then kind of moving on to like DeFi, you're looking at like trading volumes, transactions, similarly like user addresses. So, just because there's a ton of transactions doesn't necessarily mean there's a lot of users, right? Or reverse of that, like there might be very little transactions, but a ton of users, right? So it's like, are they small transactions, big transactions? But I think collectively for like Bitcoin layers, yeah, I mean, like how many users are using it? How many of them are unique, and some people can have more than one address, and what might be the incentive for them to do that, So there are different methodologies of coming up with how transactions are calculated, and that differs from chain to chain. Same with like unique addresses, like, just because you have two, like you might have two addresses, but there's actually one real user. So I think generally understanding the overall methodology, which I think is still developing in our space, we're Messari, we're trying to maintain transparency and objectivity, so we're trying to do our best to make sure that we're capturing data and processing it in a way that is effective and encourages people to really know what's happening. But yeah, I would just say user base increasing, and also like developer base, which is huge, especially during a bear market. It's really unfortunate what's happened this year. I've been in this space since like 2017, so this isn't my first crypto winter, so it definitely tastes different, but it's kind of like it cuts away a lot of the noise through all the speculation and price chatter, and it kind of brings everything back to the fundamentals, where builders are, the reason why builders are here, right? So they're trying to build applications that are useful, regardless of the chain, and it lets them focus on that. So.
Absolutely.
Just one thing I want to add on data. So, Stacks is one of, multiple layers that are building on Bitcoin. I think we're the largest developer community, some of these things. So Sean has a great report from Messari that is very unbiased that you can read through. But, as
it's free.
It's free. One of the emerging, layers that's out there, one of the things that we've looked at too is something called stacking that's unique to our ecosystem. You can buy stacks, participate in consensus, and then earn Bitcoin. So unlike staking where you're earning, stacks for stacks, you're actually earning Bitcoin. And we've seen the uptick in interest in this grow because you are locking your own custodied assets in a smart contract and earning yield. That yield is, I think, anywhere from 7 to 10% in Bitcoin annually. So there's just been a lot of interest of like self-custody control. And we've seen almost about 35% of the Stacks market cap is currently locked in stacking. People are using it, they're accepting it, they're realizing like Bitcoin, it's hard to price it, but if you're earning it over time, it's a great way to get that yield in a secure way. So we are always looking at TVL, but that's one of the metrics that we've seen. And I think at some point the total DeFi TVL on Stacks in the very near future has getting close to the whole market cap, kind of with that big chunk right now going into stacking. So that's just another place to check out if you are looking for more Bitcoin yield without a central custodian or without using an exchange to do it.
And kind of touching base on like yield, right? Like there's been so much DeFi yield and everyone's excited about ridiculous amounts of yield. And I think naturally people are attracted to at least their curiosity. But the way I look at it is like, what's the yield even denominated in, right? So it's like if you're kind of getting a token that doesn't necessarily accrue any value and like it essentially gets dumped immediately. There's constant sell pressure. There's no real utility of that yielded token. So at least in the Stacks ecosystem, the yield is denominated in Bitcoin, which actually holds value. So I think that's an interesting comparison to consider when anyone participates in DeFi. What's the yield denominated in? What does that mean to you? What does that mean fundamentally? So I think with Stacks, like Bitcoin yield is obviously very attractive, So, but it also, there are nuances that we obviously can't get into right now. But like you mentioned, my Stacks report, I tried my best to really condense all of the technical information to kind of bring it in a digestible format. So if you've read it, please give me all your feedback. I'd love to hear it. Otherwise, check it out.
Great. Yeah, we're out of time, but just one more final, where should they find Messari research reports and where to follow Stacks progress?
Yeah, so Messari.io, we have a lot of cool features on there, data analytics. We do a lot of DAO governance tracking, so as many know, like you're following Discord, Twitter, all these different channels. But yeah, all my research is on there. I'm happy to chat with anyone after this. I love talking about this stuff, so.
Thanks, John.
Yeah, and we're on all the platforms at Stacks, or you can go to stacks.org to learn more about the foundation and the resources that we provide to builders and developers. So thank you.
Thanks, everyone.
Thank you.